Good morning, everyone, and welcome to Julius Baer's Moving Markets podcast. It's Thursday, the 22nd of January, and my name is Helen. Filling us in on the latest in financial markets today, I'll be speaking first of all to Bernadette and Anderko. And with a very timely update on commodities, I will then be talking to Norbert Rücker about the recent rally in natural gas, as well as the role of commodities in the Greenland story that's very much in the headlines at the moment. So that is coming up, but over to you, first of all, Bernadette, for the market news. Good morning.
Good morning, Helen.
After hiccups with Air Force One yesterday, President Trump eventually touched down in Zurich and made his way to Davos, where he delivered his much-anticipated speech. Perhaps you could fill us in on the main takeaways, Bernadette.
Yes, well, it was a long speech, but the president used it mainly to insist that he wanted Greenland, including right, title and ownership, but did back away from his threats of military intervention. He complained relentlessly about the United States being taken advantage of by Europe and wondered why his attempt to take control of Greenland was being met with such resistance. And he accused European leaders of making their continent unrecognisable because of uncontrolled migration and radical economic policies, and speculated about NATO's willingness to come to the defence of the United States.
But that wasn't the end of the story, right?
No, it wasn't indeed. Just hours after this, he took to social media to announce that a framework for a future deal with respect to Greenland had been reached, and he withdrew the threat of tariffs against 8 European countries. He didn't, however, detail the parameters of this so-called framework, and it was unclear, in fact, what the agreement entails. He later spoke to CNBC after Wall Street closed and said it was a concept of a deal. Now, the NATO Secretary-General Mark Rutte was more cautious when he was interviewed by the press, saying that there remains a lot of work to be done. And a NATO spokesman later said that Rutte did not propose any compromise on Greenland's sovereignty during his talks with President Trump. A NATO spokesman also said that the negotiations between Denmark, Greenland and the United States will go forward aimed at ensuring that Russia and China never gain a foothold economically or militarily in Greenland. In the press today, there's a lot of speculation about what the details of the plan might be, but they still very much are speculation, Helen.
All right. How did markets react to all of this then?
Oh, well, we saw risk appetite returning to equities overnight, Helen, in the US with a nice broad-based rally. The Dow Jones fared best, up 1.21%. The S&P 500 was up just over 1.1%. And the Nasdaq Composite rose 1.18%.
OK, and what about in Europe?
Well, European stocks finished yesterday's trading session mixed, but let's bear in mind they'd only had President Trump's Davos speech at this stage. So the Pan-European Stock 600 closed the session just above the flat line. So it did manage to trim earlier losses, with regional bourses and sectors also finishing mixed. European futures have since turned green in the wake of the NATO developments with Trump. So it's looking good for the future today.
Right, let's look at Asia this morning. How are markets there reacting to the latest developments?
Well, definitely signs of a relief rally, Helen, generally rebounding after Trump walked back on these threats of tariffs. South Korea's Kospi breached the 5,000 mark earlier today, despite the country's economy unexpectedly shrinking at 0.3% on a quarterly basis in the October to December period, which is its sharpest contraction since 2022, showing how geopolitics trump data at the moment. But elsewhere in the region, Japan's Nikkei 225 was up 1.87% at one stage, and that was on pace to snap its 5-day losing streak. And the broad-based topics was also up at one stage by 0.88%. Japan also released data today. December trade figures were released with 5.1% export growth missing analysts' estimates. Japanese government bonds rebounded for a second straight session. And over in Hong Kong, the Hang Seng bucked the trend. That fell marginally, seeing losses mainly in basic material stocks. And the CSI 300 index on mainland China was flat.
And we've seen a boost in semiconductor stocks, haven't we?
Yes, again, Davos related. The sector advanced after Nvidia CEO's comments at Davos helped to reinforce investor enthusiasm for the AI trade. So one of Nvidia's suppliers, Disco Corp, surged 17% in Japan. South Korea's Samsung advanced nearly 2%. And the benchmark gauge in South Korea, which is a bellwether for technology stocks, also climbed to a new record. The upbeat mood in stocks has curbed safe haven demand somewhat. We saw spot gold lower by 0.2%. The dollar wavered and treasuries were a touch lower. Silver is also lower.
Okay, and in terms of the day ahead, what are we looking out for today, Bernadette?
Well, one interesting development, the Supreme Court case into Lisa Cook's removal from the Fed Board of Governors has started. We don't have a verdict yet, but the start of arguments showed that some of the conservative justices are questioning some of Trump's administration's arguments. So this is being closely monitored. That will continue. The WEF obviously is continuing. We'll have US PCE inflation data due out today, the Fed's preferred measure. And earnings obviously are continuing. We've got Procter & Gamble, Intel, General Electric and Capital One, amongst others, reporting. Meanwhile, futures suggesting that a risk-on mode has returned for now, Helen.
Very good. Thank you very much, Bernadette, for the great roundup this morning.
Thanks for having me.
And now on to you, Norbert. Good morning, firstly, and welcome.
Good morning, Helen.
Let's talk now about natural gas. And as some may have noticed, prices have really been surging both in Europe and the US. So what's going on, Norbert?
Yeah, the natural gas market really tries its best to attract attention at the time when the headlines are basically dominated by Davos in Greenland. This price spike that we're looking at is really a very wild one. It's happening also simultaneously in the United States, in North America, and over here in Europe. It prices in the States surging beyond $5 and in Europe temporarily hitting Euro 40. So we're looking at gains within really days, basically, of up to 40 to 70%. Such spikes, they are rare, but they're not exceptional. They're really no stranger things to natural gas market because this market is more prone than any other market to weather risk and also to sentiment swings. We believe that this frenzy that we're currently seeing is more flow driven than really fundamentals driven. And the background is that as we moved into this year, as we moved into 2026, we saw quite a bearish positioning in the futures market. And most likely over the past days, this positioning has been just adjusted in a very wild way. So basically we're looking at profit taking, we're looking at short covering that more or less hypercharge the dynamics in these markets. That said, all these kind of sentiment and flow driven dynamics, they always need a fundamental trigger, and the fundamental trigger most likely has been weather and the ongoing cold spell in Europe and this upcoming cold spell in North America.
Memories of the energy shock are, of course, still fresh. Are there any meaningful supply risks today?
We don't see meaningful supply risk, but that seems to be partially a concern or the narrative. But if you look at North America, the storage, the inventories there, they are very full. They're overly full for this time of the season. So they should be able to absorb this upcoming demand spike coming from the heating side. One of the concerns there too is that basically a cold spell that really is stretching all the way down towards Texas could be causing production disruptions because of equipment simply freezing in. But from our perspective, from our kind of learning, the oil and gas infrastructure has been kind of weatherproofed in the aftermath of such an event that we had back in 2021. If you look at Europe, yes, storage is below the norm. We are looking at the deficit, but this deficit has been in place basically since the beginning of the heating season, so since November last year, and it has not widened meaningfully over the past week. But more importantly, where these concerns came from in Europe was because there have been outages at some US LNG terminals, so liquefied natural gas terminals. That's where some of the supply now comes from towards Europe. And there have been outages in some of the French nuclear power plants. But these outages, they've been largely resolved. Both kind of infrastructures are almost back in full operation. And if you look at the weather outlook too, this cold spell that we're seeing rather has softened in terms of the forecasts.
And do you think there's a bigger shift going on in the background? Could the Trump administration maybe weaponize gas trade as a way to escalate the Greenland dispute?
Well, if you see price moves like that, we're obviously asking ourselves, what are we missing? And that could be one element. I mean, if you look at the dependence or economic dependence between Europe and the States, it's a natural gas trade that really evolved over the past years as a key link. So is the market seeing a risk that others are not? Is the market afraid of the Trump administration basically weaponizing LNG as they did in the past, for example, with China? So basically putting curbs on LNG trade from the States towards Europe. unlikely, because this would mean that it's negative for US exports, negative for US prices, and while partially positive or lifting Europe prices. But as I mentioned, the price move that we see in the market has really been more pronounced in the US. Nevertheless, let's look at such a scenario. Such a political interference would cause or would trigger a substantial rerouting of LNG shipments across the globe. So basically this short and cheap trade, because of its proximity between the States and Europe, that would be going away. All the ships would take longer routes. US shipments would go to Asia. Shipments into Europe would come out of Africa, out of the Atlantic Basin, and obviously also out of the Middle East. So this would really result in increasing shipping costs, which would be negative for the exporters and obviously lifting in parts prices in Europe. So it's nothing also in terms of meaningful supply risk. The market will be resilient. And it also doesn't seem to be a scenario that the gas market currently is pricing, but it's nevertheless worth looking at it. So in a nutshell, we think this price jump is temporary. We don't see big supply risks. And we believe eventually after this so-called, or almost feels like a beach break of profit taking, the attention should return to this swelling tide of LNG supplies that is really quenching any kind of supply risk going forward and also this year.
Excellent. Thanks a lot, Norbert. Very good to hear your thoughts on this morning.
Thanks for having me.
So that's it for today. Thanks again to today's guests and to you, our listeners, for tuning in. I hope you enjoyed the show. If you did, then make sure you subscribe if you haven't already. And please join us again tomorrow when I'll be back with more of my colleagues to talk about what is moving markets. Until then, though, have a great day, everyone, and bye for now.
The information and opinions expressed in this podcast constitute marketing material and are not the result of independent financial or investment research. Please refer to www.juliusbaer.com/legal/podcasts for further other important legal information.